Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you're with us. It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts here to take us through the trades. Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Great to see you both. Alan, we've gotten in our GDP, which is sitting at 3%. Jobless claims, 4-month lows. We have the 50 basis points cut. How are you feeling about the market, where it might be headed in the near term? I know you look at a lot of charts and technicals.
Yeah, I focus on price, and I'm a trend guy, and I like what I see. And that last guess was great TV. I don't know how great that financial advice is. Trying to pick a top and a turn is the biggest challenge in any market, anytime. I've been doing this for 35 years. For me, this feels like 2010 all over again, that no one believed. The market continued to rally. The fundamentals remain solid. Corporations continue to make profits. We're going to see profit growth next quarter. They're expecting 5%, growth. Their earnings growth. They're also expecting 5% revenue growth. They're also expecting 12% profit margin, which is above the 5-year high. So when it comes down to it, corporations are doing very, 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 very well. And to try and anticipate when a shark is going to bite or when an earthquake is going to happen, that's not the business I'm in. I'm in the business of probability and positioning for success, but with limited risk and being able to focus on the big picture.
Okay, that being said, first up, you're talking all about gold. Gold's been bumping up against new highs, all-time record highs. You're looking at Kinross Gold today. Why?
Right. It's a big but. Gold is continuing to make new highs, but the miners are not anywhere close. If you look at the basket of miners, the GDX is not even anywhere near. We're trading at 42. The high in that has been 66, and that's not even adjusting for inflation. So we're still 30% away, and these guys have the gold. They have the gold in the ground, so they're not being recognized for a gold price here at 2,600 because of the value of their ounces in the ground. These companies should be worth more. If you look at the stock, I focus on money flow. Money flow is money continuing to flow into the long leverage positions in this stock, a strong trend. This is a stock that's been between 8 and 10 for 3 months. Breakout targets 12. This stock had been up to 31. It had a high at 27 in 2008. We're sitting at 9.75 right now, not even 10. So I'm looking at a May option, a May $8 call, trading for about 2.25. It's only, $25 more expensive than buying the January option. Buy more time just in case you need it, in case there is a dip. Limited risk. This is $225 maximum exposure. We've got 8 months of time to break even on it. It's about 50 cents higher, and we have a very strong trend. Obviously, the dollar down is a big catalyst for the gold market.
Yeah, I mean, look, to your point, it's well off the record highs, but has had an incredible year to date. 6 months, it's up 67%. Year to date, it's up 62%. 1 year, 108%. So it hasn't been a dud of late, but as you
But it's 30% off its highs with gold. It's 30% off its highs with gold at all-time high. There's a big disconnect. Right. There's a rubber band snapback could happen.
So let's see what Rick Ducat has to say about the charts. Rick.
Yeah, I would echo a lot of your comments, Nicole. Very strong performance in the recent term here, and we can see that basically since the year started, the 2024 year, pretty much just straight up here. Most of the price action fits within these two white dashed lines here, giving us this channel type shape here. And all we did was draw a conventional trend line across the bottom, duplicated it, put it across the highs, matched up pretty well here in this case. Not going to happen every time, but in this case it did match nicely. So more recently, we can see that price has been supported by our moving averages here. You can see that our yellow 21-day, orange 63-day price has usually made a bit of a bounce after, touching on these averages here. So it could be an important thing to keep an eye on if we start getting closer to one of these major moving averages again for a potential buying opportunity. And, today's candle pattern, actually kind of interesting too. A little hard to see probably for the folks at home here, but we're on pace for a bullish engulfing candle where we had a small red candle candle yesterday, today's larger green candle completely swallowing up the previous day's real body, the distance from the open to the close. So this could be an interesting scenario if we do get some bullish follow through the next day. RSI also is a bit of a mismatch with our price action here. You can see a gradually declining set of highs on the RSI as price has continued to rise. So a little bit of bearish divergence. But, you know, this is something that you have to kind of read with some nuance here. It's not always going to play out, obviously. Nothing in trading ever plays out all the time here. And in this case, the price action was stronger. All this is telling us is that the pace of the gains at the highs is slowing down here. So if we were to keep looking for upside movement, 1010, obviously that's the high point here. That would be, Allen's trade would be looking for a break above this level. We're pretty close to that resistance point. Seems like a reasonable point to start looking. To the downside, green line here. Pre-gap up high point here and then a subsequent low point near 916. Also where our linear regression line comes into play there, our line of best fit based on closing prices. So around 916 and 935 would be a support zone based on those indicators, as well as our yellow 21-day EMA, Nicole.
Okay, thank you for that. Look, nothing ever goes all the time, right, as Rick is saying. But final thought on this one, Alan.
It's just a probability play, gives you the ability to be long from 8 at that support level. And if we just get to a modest 12, which is the technical target based upon this range, then this option gains 100%. It's just math. It's just probability.
So I'm seeing some buy ratings on Estee Lauder. For example, I see that Wells Fargo, they did adjust the price target to 105 from 117, but have an overweight rating. D.A. Davidson buy and a $130 price target. It's sitting today at $100. Do you see some upside potential here?
Yes, a ton of upside potential. This has been in a downtrend, in an ugly, ugly downtrend. And it's dropped from 160 to 80. So makeup's half price. Now, we did get a bounce today. I looked at this before we actually got this bounce, but that doesn't negate the long-term prospects of a reversal in this stock, or even just a modest reversal. Like I often say, I'm just looking for a modest move. A 5% move produces a 50% gain. A 10% move in the stock produces a 100% gain. So we also saw a bullish divergence bottom, which I use on this, and I've talked about on your segment over and over and over and over again, that we saw new lows but not new highs, implied volatility. That's a sign that the short sellers are running out of strength. At some point, they're going to take their unrealized profits, cash them in, and then the market can feed on itself and move upward. The way to play, I'm looking at a January 90 call. It's trading for about 15. It gives us 3 months of time. And the midpoint, of this is 120. So a modest move can get this quickly to the 120 level. And then we could see some real gains here in this stock as well.
Yeah, and then you get up to some of those price targets that I'm talking about. Rick, what do you think about the charts, please?
Certainly a rough year for this company here. A pronounced slide to the downside here. And it happened kind of shortly after we hit our highs here near 159.75. Then we had kind of this sideways period, not really making a strong move to the upside or the downside. And then a very severe decline from that point. And we are still down 37% from those highs. But the recent picture actually is pretty interesting here because, for one, we have broken out of this trend line, this longer-term blue trend line. We are pushing to the upside. We took out our volume profile point of control, this thick red line right here. That's the area of heaviest trading. It can be an important point to gauge resistance or support in that area, and we did push above it here. We also have made our way above our yellow 21-day and orange 63-day exponential moving averages. So what we're seeing are signs of potential trend shift here. And we also did see a little bit of divergence in the RSI. Unlike our last chart, you can see price made a lower close, but RSI was actually trending upward during that time. It did play out to the upside this time. Just a reminder, RSI is just kind of a clue that you can use to inform your trading decisions. You shouldn't make decisions just based solely off of one instance of divergence or anything like that. Kind of use a more complete picture in your trading here. Nevertheless, acceleration of trend in the RSI, pushing above the 50 midline, getting quite close to the overbought area, which would be a sign sign of strength. Now to look at resistance here. Well, we've got something pretty close on the horizon here. We have this series of short-term topping action there near like 102. That would be the mark to beat in the near term. The next high would be around 115.82. To the downside, we've got our 63-day EMA, but right here, this green line matches up with our volume profile point of control near about 93.30 or so. That could be a supportive area, Nicole.
When does Rick, when does the RSI, which is showing the strength there, start to become a contrarian indicator? The overbought and it's showing strong. When does it sort of scream the other way?
That's a great question. That's something that is kind of one of the thornier issues with the RSI. Quick answer would be if a stock is trending and the RSI goes into overbought or oversold, it's usually a sign of strength. If the stock is more range bound with like a clearly defined high point and low point that it's been trading within, and then it goes overbought or oversold, that would be more of the contrarian mean reversion type of indicator there. So it's basically whether it's trending or whether it's range bound.
Yeah, good answer. Alan, final thoughts on this one, please?
Well, I liked it a lot better before this big bounce, but this is a long-term position. Again, this is maybe only 3 months, but we're looking to see if we can get some follow through. It was very, very oversold. Now let's see what happens to all those shorts that have to take their profits and you get a little bit more of a squeeze and extension, but this needs some more extension, but it's a good position for the next couple of months.
For a second, I thought you were going to say, and I was hoping you wouldn't say, I liked it a lot better before Rick's charts. Good. Okay. Sgml, last but not least here, Sgml Lithium has been on this downtrend, hitting a low of basically $8.50. Where's this headed?
So again, another bullish divergence play. It made this low in August. It's been trading sideways since that time. It's been between 8 and 12. So a breakout of this range target 16. This was a $30 stock in December. Again, it's about risk reward. I'd rather be long a stock like this or long a stock like Estee Lauder than short. So we're sitting around 12 right now. I'm looking at the April 10 call, which is $2 in the money. Is trading for about, $3.50. The April option has 6 months of time, only $25 more expensive than January. And if we get to that breakout of 16, if we get to that breakout target of 16, this option gains 100%. So I like what I see. And again, it comes back to the money flow indicator that you're seeing leverage long accumulation. I'm following the smarter, the bigger money. And that's the path of least resistance. They usually have a sign that they know something. And that's why they're positioning themselves with these high probability plays.
Okay. Look, and it is up off the lows, to your point. It has been going in that direction. Rick, some of your thoughts on the technicals, please?
Sure. Lithium, definitely important raw material for, the use of batteries, electric cars, stuff like that here. So a long-term bullish play seems, pretty logical, when you think about things like that here. But trending downward for quite a while, kind of like our last chart. Much of the year was a downward sloping trend line here, but we have had a bit of a breakout once again. You can see here we've pushed beyond that blue trend line shortly after hitting our yearly lows here with a very slight upward bias here in our channel that we're looking at between these two light yellow lines here. RSI also improving once again. Green trend line going upward here. We're above the 50 midline, pretty close to the overbought area. That would be another good sign. However, we have been halted for the time being here in our little channel here, right around the upper edge of the channel, as well as our volume profile point of control. They kind of come together in the same spot, right around 1260 or so in that general neighborhood. If we were to keep climbing here, we've got a resistance point right here, 1325. That was our relative high point. So quite close to Allen's break even. Seems like a pretty reasonable point to start thinking about a trade there. And beyond that, the next high point, that little green candle, we had a small spike up near 1730. That would be another possible area to look for upside resistance. To the downside, we've got our short-term white trend line. We've got our two moving averages quite close together near about 11 or so. And then beyond that, we had a small gap up, and then the low point after the gap is our green line near $10, Nicole.
Okay, thank you so much. Good to see you, Rick Ducat. Final thoughts, Alan Nuckman?
I'm just a trend follower. I trade what I see, and optimism wins. So I like where we stand, and like I said, I'm never going to be the guy that's going to try and pick that top of the turn. You got to embrace what you see and try not to think too much and just follow what the market's telling you.
Okay. Thank you both for the big three today. Appreciate it. Alan Nuckman, bullseyeoption.com, and our own Rick Ducat there on the charts. Thank you both. Coming up next, we're going to spotlight AI.